Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope everybody had a beautiful day. And in today's markets, guys, well, it was largely a day of a recovery story. Most of big tech was severely hit by Meta's earnings yesterday. Meta obviously dropping in the after hours yesterday, 16%. And that negativity poured into the rest of tech stocks. Overnight, stocks such as Google, Amazon, Microsoft, the bunch of them were down 2 to 3%. And that is how they opened the morning. But the bulls did a great job in finding those mispriced securities and bidding them up higher. The reason I say mispriced is because I do believe that yesterday's reaction to the Meta earnings was a lot of an overreaction, guys. All of their financials were purely amazing, and we covered that on the channel. The only thing that they said that was bad was that they were increasing capital expenditures to expand their AI endeavors. And that usually translates to an increase in productivity down the line. That increase in productivity, however, may only be seen as soon as next year. A lot of the sell down, guys, was most likely algorithmic trading. And algorithms don't really think these things through. They're really programmed to either buy or sell depending on whether certain financial metrics come in above or below the expectations. And when they saw that increase in capital expenditures, it signaled a negative point for them and sold off the markets heavily. However, this morning was a big readjustment factor, traders bidding up Meta stock from the bottom and bidding up the rest of big tech stocks that got hit as well. So in today's video, guys, we're going to cover a few things. Number one, we're going to cover the GDP report that came in fresh off the press this morning. So we're going to take a look in terms of the health of the economy. Number two, we're going to take a look at our major technical analysis in terms of our rundown on the indexes and big tech names. Included in the big tech names will be a very brief rundown of Google and Microsoft earnings respectively. So those will be at the end of the video in the technical analysis portion for the respective big tech companies. And then lastly, we're going to take a quick glimpse into my portfolio and see which new trades I put on today for tomorrow. So without further ado, guys, let's get right into today's video. So SPY down 0.38%. But had a heck of a rally, guys. Even though we closed red, take a look here. SPY was down at one point to open the morning, 1.5%. And QQQ, as a matter of fact, was down almost 2% to open the day. And it was just pretty much rally mode from the bottoms all throughout the session. So SPY down 0.38%, yes, but beautiful recovery. QQQ ended down 0.48%, but beautiful recovery there as well. Financials and healthcare were indeed red. So if you look at this on a first glance, guys, it does appear that the market was having some difficulties today, but it was a big story of recovery the entire day. So you would only get half the pictures if you were just looking at these numbers in their pure form. In terms of a market rotation, how healthy was the market today? Well, we can see, guys, that for the most part, big tech stocks, although they did rally for a big portion of the day, they were still bogged down by those Meta earnings. Meta did a great job recovering. They opened pretty much 17% to the downside and recovered almost half of that over the course of the session, still ending about 10.5% in the red. Google, Amazon, Microsoft did not have the best days as that negativity poured into them. Microsoft at one point today was down over 4.5%, so they recovered nicely. The one area that was not affected was your semiconductors, because the increase in capital expenditures from big tech, such as Meta said yesterday, looking to expand its network of GPU processors for their AI endeavors that they're attacking, right? Well, that translates into more sales for NVIDIA. So NVIDIA had a great day off of that. And even Google and Microsoft reiterated on their earnings calls today that they are also increasing capital expenditures in AI. So just think semiconductors to be the play for that as well. In terms of the rest of the market, fairly negative day, as that negativity from Meta did pour into the rest of the market, guys. And the lower than expected GDP did not help in the morning, but in the afternoon, we got a more broad market rally. There was a lot of recoveries to be had. So this market this market snapshot really only shows half the picture of that recovery. That being said, healthcare did end red. Most of your names red. Financials as well mostly ended red. A lot less red than they started the day, but still red indeed. And we did have the bottom half of the market, guys, very, very mixed indeed over the course of the day today. You can see that even best expressed in the one-day relative performance. Very mixed market as a whole. A few of the green sectors as a whole were energy, basic materials, industrials, utilities, and technology. And to the downside, we had a few major sectors, namely financials, healthcare, and communication services. Communication services obviously led down by Google and Meta, your two largest weights in that segment. So very, very mixed day as a whole, but I'm pleased to see that the bulls were able to recover a lot of the damage that was done during Meta earnings and did agree with me that, the Meta earnings crush was a bit overdone. Dare I say, a lot overdone. So with all that being said, guys, let's now jump into our GDP numbers before we attack our technical analysis, shall we? So the GDP numbers, well, they came in less than expected. Take a look at this snapshot right here. We were expecting 2.5% growth in the first quarter. These are preliminary numbers, guys. The Q1 numbers can always be revised at a later time. And as a matter of fact, they usually are. But at a first glance, we did miss considerably. It's not all that it seems, though. They came in at 1.6% growth. That is severely under the expectation of 2.5% growth. So you could assume potentially, just at a first glance, that the economy is slowing down, but we need to read into the data to see if that's the case. So let's take a look at the data and why there was such a slowdown, apparently, in the U.S. economy in the first quarter. So take a look at this. Imports hold back U.S. economy in first quarter. Inflation flares up. We did get a preliminary number on your core PCE. Now, the final number is not out till tomorrow morning, but as a whole, it did come in hotter than expected. Most of that came in, once again, from services, transportation, auto insurance, and medical services, and shelter as well. The four same sticky elements that we've been talking about on the channel since pretty much the month of January. So really no change there. But remains to be seen what will be the final PCE number tomorrow. Now let's dive into GDP because we have the final number on that. So the U.S. economy grew at its slowest pace in nearly 2 years in the first quarter amid a surge in imports and a small buildup of unsold goods at businesses. I'll remind you guys, imports are not necessarily a bad thing, but to have an expanding economy in terms of economic models, guys, you need to be exporting more than you're importing. The net difference between the two either contributes to positive GDP or negative GDP. If you're exporting what your country produces, if you're exporting a lot more in terms of dollars than what you're importing, well, then you have a net export excess. You obviously get paid. But when you're importing a lot more than you're exporting, well, that results in an economic deficit in terms of your imports versus exports. So this is what this is touching upon. So signs of a solid demand that, together with an acceleration in inflation, that PCE data, reinforced expectations the Federal Reserve would not cut interest rates before September. Now, moving on further, the cooler than expected growth reported by the Commerce Department in its snapshot, which also reflected a downshift in government spending, exaggerated the moderation in economic activity. That's just a fancy way of saying what we're going to take a look at here, guys, in the charts below. Don't worry, I got you covered with the simpler explanation. So, domestic demand, a better growth measure, was strong as consumer spending moderated slightly while business investment picked up and the housing recovery gained steam. So a large portion of your GDP decline, guys, was a decline in government spending and an increase in import activity. The key drivers that we need to look at is your domestic demand. What's happening within the United States with consumers and businesses while we take out the government and we take out exports and imports. This is a very key metric. And that, as a matter of fact, was very strong. So here we go. Excluding inventories, government spending and trade, the economy. So here it is, excluding the inventory buildup from imports, government excluding the government spending and the trade deficit, the economy actually grew at 3.1% instead of the 1.6% headline. That is a stark difference after expanding at a 3.3% rate in the fourth quarter. That also dispels the notion that government spending was fueling the economy, right? A lot of people were saying the only reason the economy is strong is because of all the money that was printed 3 years ago at this point and all the stimulus checks. Well, this just goes to show that that is no longer the case, guys. The government is no longer fueling the economy. As a matter of fact, they tapered a lot back on their spending, which impacted GDP to the downside. The U.S. economy, which has outperformed the economies of other advanced nations, is being supported by a resilient labor market. And here's what Janet Yellen had to say about this too. So those two elements of final demand, focusing on consumer and business spending, the two most arguably the two most important factors of any GDP report, consumer and business spending. How healthy is it? The two elements of final demand came in line with last year's growth rate. So this is the underlying strength of the US economy that showed continuing robust strength and an economy firing on all cylinders. And I do agree. The personal consumption expenditures PCE price index that we're getting tomorrow, they released it preliminarily today. Excluding food and energy, surged at 3.7% after increasing at a 2% pace in the fourth quarter. That is a large increase, guys, but most of it, once again, is coming from services. So we'll see what the final number is today. Not going to spend too much time on this today because it's not the finalized number. So here we go further down here. Take a look at your US GDP. You can see a little bit of a deceleration here in the first quarter, but because of the elements that we explained previously, it's actually not that big of a deal. If you remove the deficit in government spending and you remove the impact of net imports versus exports, well, the economy would have actually been all the way up here, guys, at about 3.1%. So it's not all that bad. We also have a very tight labor market. Take a look at some jobs data that came in today. US jobless claims. It was considerably down. So we're definitely still in the context of a very, very healthy jobs market, guys. The last thing you want to see is jobless claims, meaning more people are unemployed, right? So they're jobless, basically, right? That would be skyrocketing. That's what we don't want to see. So far, no sign of that. Now, low layoffs are keeping wages high, sustaining consumer spending, which accounts for more than 2/3 of economic activity. Consumer spending grew at a still solid 2.5% rate, slowing from the 3.3% growth pace notched in the October-December quarter. Spending was driven by healthcare, financial services, and insurance, once again, which more than offset a decline in goods. Spending is likely to gradually cool this year. Lower income households have depleted their COVID-19 pandemic savings and are largely relying on debt to fund purchases. So once again here, guys, we have a slowdown in the consumer. That's obviously impacting your prices of goods. So goods inflation is coming down. Services inflation remains sticky, but that is also due to some seasonal factors. A lot of services companies do increase their prices at the beginning of the year. So that should be tapering off as well. All in all, not a bad GDP report, not a bad preliminary PCE report either. And that is pretty much everything that we're going to cover in the article, guys. I don't want to bother you too much, but the gist of things is that consumer spending, although is diminishing, is still relatively healthy. It's in the context of an overall healthy economy that is still expanding as well. And the jobs market is still healthy too. So overall, there's no major macro worries right now. The only worry that the market is concerned about is higher rates for longer. But that has now been the case in point for the past month and a half, arguably at this point. So the market's getting used to those expectations. They're starting to price in the fact that we may just not get any rate cuts this year at all. So that is pretty much the gist of the article we just went through. Now, in terms of your technical analysis, guys, let's tackle this right away, and then we will dive into our big tech names and get to those juicy Google and Microsoft earnings. So let's take a look here, guys. So your SPY, what were we looking out for? Yesterday, we had commented on the fact that because of the Meta earnings, we were going to open lower, and this would result in an hourly downtrend, right? So the size of step number one was we were looking for the size of this bounce. Context was a daily downtrend. We were looking for the size of the bounce to see if the bulls could regain the daily uptrend. How did you know that the size of that the bounce was finished at the top here? Well, it was a loss of the hourly trend into today, but now the bulls have recaptured a lot of that. So what are the bulls trying to do? They are trying to do the daily uptrend reset right away. And as we can see in the after hours right now, we closed at about 507 after very good reports from Microsoft and Google. So if we do break above yesterday's high, tomorrow it will be a new daily uptrend. So that is very, very bullish for the bulls. If we want to open in this area tomorrow, guys, I would like to see our bulls push all the way into the 509, 510 area. If they can get that done and break yesterday's high, new daily uptrend would be set. That would mean you have a bottom to your weekly level right here, and we would just be looking for a potential recapture down the line of the weekly uptrend. So a very, very juicy day for the markets. The bulls are not out of the woods yet, still need to reset that daily uptrend, but looking very, very, very healthy, if I do say so myself. We do have further overhead resistance right now, the two overhead moving averages as well, and we have the top end of this previous support box, which is now resistance at that 509.50 level. So if we can really make some moves into this tomorrow, guys, get back above our moving averages, the bulls are going to be looking very healthy for the daily uptrend and now start to recapture a lot of this weekly move down. Could we get a V shape? At this point, it would be unlikely. If we get any form of trend recapture, in my opinion, it would probably be a two-step process like this rather than just a V shape. Keep in mind, we do have more company earnings next week. Apple, Amazon, going to be two big ones. And next week, we have the Federal Reserve meeting with Jerome Powell on the Wednesday session. So that is obviously a market moving event. We're not expecting any interest rate changes, but we could expect him to comment on the recent uptick in inflation. So far, Jerome Powell has kind of shrugged off the hotter than expected data in January, February, and March. Let's see if tomorrow's data from April comes in hotter than expected too. That will be 4 months in a row, and Jerome Powell will have to say something about that, in my opinion. Now, moving on to QQQs. So QQQs, also in the context of this daily downtrend, we were looking for the size of the bounce. And as of yesterday, guys, the size of the bounce was, adequate, right? About a 50% bounce. And obviously the bounce was finished with the Meta earnings crush, new hourly downtrend. So your daily bounce was finished. Then we were looking to the bulls. Can they protect these lower lows and recapture the daily uptrend? Well, today, with a heck of a bounce, continuing into our after-hour session with Microsoft and Google, it does look like the bulls want to engulf this move, reset the hourly uptrend, and then if we can break yesterday's high, similar to SPY, you recapture your daily uptrend. That would be the first daily uptrend, guys, in pretty much over a month's time at this point. So the bulls are set up nicely for tomorrow, especially after the earnings from Microsoft and Google, which should carry this market higher into tomorrow's trading session. The only thing that can maybe derail us is hotter than expected PCE numbers. Those may impact the markets negatively. So if that ever happens, guys, it's going to be a balancing act between your very, very good big tech earnings and hotter than expected inflation. But in my opinion, guys, even though inflation's coming in hotter than expected, it's not probably going to skyrocket back to the levels that we had last year. If anything, it's going to be a slow trickle effect before slowly coming down again. So it will be a bumpy road back to 2%, but I do believe the Fed does have inflation under control at this point. And the market, as I said previously in the video, guys, the market's already pricing in the fact that we may just not get any rate cuts this year. And a lot of the damage that's been done over the past month has been that pricing in effect. And that started happening as early as the month of March. So QQQ bulls looking good. Just need to see them recapture these highs by tomorrow, reset the daily uptrend. Everything looking very good, guys. The bulls are now starting to recapture a lot of your short-term time frames. Now moving on to XLF. XLF looking very healthy as well, right? The size of the bounce was very adequate. We were looking for a reversal of this daily downtrend, right? Let me just adjust this line right here. Looking for the reversal of this daily downtrend. What do we need for that? We needed a healthy bounce. The size of the bounce was very juicy, up to about 75%, which really gives the bulls a great opportunity at setting the higher low and then resetting the daily uptrend. Now take a look what happened today, right? We came down into the lower $40 levels and look what happened. The bulls pretty much said no and started recapturing the hourly uptrend. So your daily consolidation potentially finished and we may just be on to a further leg up. Where did we reject from on the downside? Well, take a look, guys. All the moving averages that we got above, the market rejected them today. The bears were not able to gain any more ground. Bulls, you really using this area to play defense. So tomorrow we're going to be looking for a break of Monday or Tuesday's high rather for the confirmation that the daily uptrend is back. If we can confirm the daily uptrend is back, well then you would have your official weekly higher low. And then we'll just be looking, guys, for continuation right here of this weekly uptrend. Financials earnings were amazing. So I would not be surprised if the bulls are really able to recapture all of this move back up to the all-time highs, looking very good. The only thing that stands in our way is that we're still using this all-time high area as current resistance until we get up to it. So the bulls could have a little bit of a challenge, but it's nice to see, guys, the size of the bounce was respected, trying to set the daily higher low. Now just need the higher high break, confirmation of the daily uptrend, and your bulls regain control of the major daily time frame. Moving on to XLV Healthcare at this point. So XLV, not looking too bad. We were looking for the same thing, right? So daily downtrend was confirmed at this point, right? And your most recent lower high was right here. The bulls put in a 100% engulfing move, looking to set the daily higher low for further trend change. So at this point, guys, the hourly bulls have not regained control on healthcare, but we are trying. What we need to see for this daily downswing to be finished is a recapture of the hourly trend change, right? When we get the capture of the hourly trend change, and by the way, while we're on this topic, guys, of inter-time frame analysis between the daily consolidation and your hourly recapture of the trade of the trend change here, I rarely talk about trading opportunities. I feel like I should do that more, right? So when we're looking, guys, for the reversal of a daily time frame right here, and you're looking to pick the daily higher lows, what you need to be looking out for is the hourly trend change. So tomorrow, if we can get a break of 140.44, that would be an official hourly trend change. When you see the hourly trend change pop off right here, there is a trade to be had, and the trade specifically is going to be a daily trend reversal trade at that point. We're looking to pick the higher lows. How do we know it's the higher low? We go with the hourly trend change. Once you get that hourly trend change, you enter the trade and you set your stop losses below these lows right here, because the theory is as follows. We are either getting the daily higher low for nice continuation to the upside, or we are wrong and we stop out down here. But this is the pattern we look out for. So the risk would be all the way down here, right? So let's say from let's call it about 140 all the way down to about 138. You have $2 worth of risk, but you're going for the daily trend change, right? And this daily trend change could maybe bring us back into this level right here, 143. So you'd be going for roughly $3.50 of upside for about $2 of risk. And obviously, if you clip this properly, coming into weekly momentum higher, well, then your risk reward may be even getting better. So those are the types of trades that I take. That's why inter-time frame analysis is so important for reversal trades. As a whole, guys, the bulls not looking too bad right here, still playing a lot of good defense in this area, which is your area of previous all-time highs. So if we can get the daily trend change, guys, then we look how much of this weekly move can we get back to do the same thing to reset the weekly, since we're in a weekly downtrend right now. So the bulls looking good. Step number one, they are trying for it. Just need to confirm these daily trend changes similar to SPY and also similar to QQQ. Now moving on to SMH semiconductors. So semiconductors having a great day of recovery, up 2% as well. Semiconductors still battling with our overhead resistance. That's pretty much 216 down to about 213, this green box right here. And your moving averages, it's just basically previous support, which is now acting as a bit of resistance. The size of the bounce on SMH was decent. Let's say it got about as high as about 50% before being rejected in this whole area. That's normal right there. What we're looking for now from the bulls is, can we reset this daily trend change? So SMH never lost the hourly trend at all throughout the past few days, right? Never really closing below here, never losing the hourly trend. So the hourly trend is still in motion. This daily bounce is still technically in motion. So I would like to see the bulls get above 216, 217. If we can get above there, the bounce size will be decent enough to give the bulls a chance at resetting this into a daily uptrend and putting an end to this weekly downtrend as well. The size of the bounce on the weekly is quite respectable, right? About 50%. So the bulls do have a chance right now at the V-shaped recovery, looking fairly good on semiconductors, if I do say so myself. So we will keep our eyes peeled whether or not the bulls can do it, mount above and reset the daily trend change, or if for some reason the markets just fall apart tomorrow, it'll be up to the bulls to protect these lows right here, 198.69, right, to maybe reverse this into a daily downtrend, daily uptrend, excuse me, from there. All in all, guys, looking fairly good. This week is a very beautiful week in market recovery. The size of the bounces are very decent. Now, moving on to IWM Russell. IWM Russell down about 0.61%. Normal, they were kind of in the same stage as the rest of the market, right? So the Russell 2000 trying to reset into a daily uptrend right now. We're going to be looking, guys, is today the daily higher low? Well, for that, we need to review the hourly trend. You can see right here, the bulls have not confirmed the hourly trend change just yet. We are still technically in an hourly downtrend. So tomorrow, if we can reset this into an hourly uptrend, that means that our daily higher low is set at the low of today, and we'll be looking to mount above Tuesday's support, Tuesday's resistance, 199.18. That would give us back the daily uptrend and put an end to this first week of weekly consolidation. Then we measure how much of this move can the bulls take back on the weekly to give ourselves the best chance at resetting into a weekly uptrend, since we have now lost the weekly uptrend as of most recently, right? It's up to the bulls to now play defense and reset that. All in all, not looking too bad, but the Russell still being plagued by interest rates, guys. Take a look at the 10-year about 4.7, another big update for the 10-year today, and the 20-year, another big update as well. The 20-year now almost back to 5%. I didn't think it would get back to 5%, but we're almost there. So the Russell will continue to struggle, guys, as long as interest rates do remain high. Now, lastly, the Dow Jones also with the gap down open into a lot of recovery. The Dow Jones at one point today, guys, was down about 1.83%. one of its worst days in recent memory, to be quite honest with you, right? So the Dow Jones looking to do the same thing as the rest of our indexes, looking to reverse this into a new daily uptrend. So the size of the move on the Dow Jones, I'll remind you, was quite adequate. We did bounce up above the 618 level, which is our golden ratio. That is when the probabilities of a trend change get very, very juicy. So how do we know if this is the daily high or low or not? Well, take a look at your hourly, guys. The bulls have now confirmed the hourly trend change. So the hourly trend change is now in their favor, right? Big hourly downtrend after yesterday's earnings. The bulls got it back today. So the daily high or low is set at this point. Now we need to see, can the bulls break above our previous area, yesterday's high? That would confirm the daily uptrend. But we do have a lot of resistance above us right now, guys. 38,500 is a hot area. All of our moving averages are there. And we also have upside horizontal resistance. Used to be support and now resistance. That's the 38,500 as well. So the bulls have their work cut out for them, but they should be aided by Microsoft and Google tomorrow. And then obviously we have Apple and Amazon, which are also components in the Dow Jones, coming up next week. Those could be the catalyst that really lifts this index above and start regaining some of the daily uptrends, and also potentially start regaining some of this weekly uptrend that unfortunately we've recently lost. So looking quite decent on the Dow Jones. The bulls just need to put in a little bit more work. Now, let's move down into our big tech names, shall we? Give me a very quick second. And let's do it. So Apple not looking too bad today, guys, 0.51% to the upside. So Apple upswing does continue at this point. Keep in mind, Apple with earnings next Thursday. So really only about 5 trading sessions before Apple reports earnings. I'm not expecting big moves on Apple in either direction. I'm not expecting a break of 178 or necessarily a break of 165 much before your earnings. If anything, we just tighten up in this range of accumulation here prior to your earnings session. That being said, the size of the bounce recently is getting up there. It's still quite weak, only about 38.2%. I would love to see Apple maybe get as high as about 173 prior to the earnings, guys. If we can really get up to about 173 prior to the earnings, it really gives us enough space between the 173 and our lowest lows of about 164, gives us about 5%. Usually on any given earnings, guys, Apple only moves about 3-4%. That's why if I say if we can get above here, we can give ourselves a good chance of not breaking these lows, even if earnings are bad. So that's what I would like to see for the stock before earnings. As of now, we are still searching for our daily trend change. So if we get something like this, continuation tomorrow, maybe Monday and Tuesday as well, if earnings are good, we could get continuation, then look to set the daily high or low, and then we'll be into earnings. Earnings can either change this into a daily uptrend or just revert us back, and then it'll be up to the bulls to protect these lower lows. In the event we go lower, guys, you guys know me, 155, 150. It is the 200-week moving average confluence for Apple as well, that whole 155, 150 zone. And the reason I like that area, guys, Apple has not lost a 200 weekly EMA in about 15 years at this point. Tremendous buying opportunity if ever earnings send us down there. I would be highly surprised if that would be the case, guys. That would be a drop from current price of about 13%. And Apple has really, ever since I've been following the stock for now, God knows how many years, 7, 8 years at this point, right? I have never seen Apple go down 13% off of one quarterly earnings. So probably out of reach at this point, but anything can happen. We saw that with Netflix. We saw that with Meta as well, right? So anything can happen. If it does come down there, guys, I will be going very heavy with leap call options, probably 2-3 contracts deep. Very, very juicy trade. That being said, Apple shaping up nicely. At least we are well back above our lows, and we're now back above our big area of support that we had lost, and that is the 168. Now moving on to AMD. So AMD also up 1.33%. The work is not all done for AMD. However, we are still in the context of this extended daily downtrend. The bulls are looking to reset this into a daily uptrend. Nice little bounce day today. Let's zoom in on the hourly trend. So we had our hourly trend change into yesterday, and today we were in jeopardy of losing it, but the bears never fully converted. They had it in the morning, but then the bulls just engulfed. So there's a big battle on AMD right now. The daily bounce is currently still underway. Now, if the bulls can break back above yesterday's high, 157.85, we would have our first daily confirmed uptrend on AMD for the first time since pretty much all the way back here. So very, very pivotal point in the company's price action right now. AMD with earnings next Tuesday. So there won't be too much price action before Tuesday. What I'm expecting is I am expecting AMD to hold these lows of 144 prior to earnings. And I'm also expecting them to hold under the 165. There's a lot of resistance up here that without a big move from earnings, earnings, it's going to be tough for AMD to really blow above this level prior to earnings, right? So if we can pull up into this area of resistance right now, this green box, right? 165 to 158. If we can pull up into there, guys, it creates enough space on the lows. If we can hit the highs of this range, 164, 165, well, that creates 12% of downside between price and our utmost downside levels. That would be a very good cushion in the event earnings aren't as spectacular as people are expecting. Very good cushion to potentially protect this 200 daily moving average as well. So the bulls are trying, but in my opinion, guys, fairly limited price action. Even if we get the daily uptrend into tomorrow and Monday, well, Tuesday's earnings is going to completely, either continue this majorly to the upside or just completely undo any work that was done in the event that earnings are very, very negative and it goes down above 12%, right? So AMD kind of caught right now, looking very good. The valuation down here at 140 is starting to get a lot more attractive. So if ever, for some which reason, guys, we just hold these lows until earnings and then flush for earnings, I will be looking, guys, 140 down to about 130 is a very, very juicy opportunity to be picking up AMD in my opinion. Now moving on to Amazon. Amazon with a great day of recovery today, 1.65% down, but take a look at the intraday recovery. This is why I say great day. Amazon was down at 5.8%, and they only closed down about 1.65. So huge move off the lows here, guys. Talking about almost 4%. Amazing day of recovery. Amazon as well with earnings next Tuesday. Very important day for Amazon. Amazon now at this point with the flush of today, we are in a daily downtrend, but we did not lose our major area of support, right? 173 to 169. The bulls reacted to it and bid it back up all day. So looking good, even though we're in a daily downtrend, guys. Now at this point, we're going to measure the size of the bounce. The size of the bounce in one day is already pretty good, but if we can get back as close as possible to this 178 level, it really gives us enough space, guys, that prior to earnings, right? If we can get back up to 178 to lose the 178 mark until the low of today, right? That will be 7% drop after earnings, which is a fairly large drop for Amazon. So it creates a lot of cushion. So the bounce is looking good, but just limited amounts of price action, guys, before earnings. So before earnings, I'm really not expecting a break of 180 in a considerable fashion. There's only 3 days of trading left. And I'm also really not expecting a break of this whole last region of support, that 166 that we were kind of playing into today. I'm also not expecting a break of that. If after earnings we dip to the downside, though, you could be expecting some gap fill. So if we kind of putter around here before earnings and then we get a drop of for earnings for some which reason, guys, just be expecting a potential gap fill here at the $160 mark. But Amazon, so healthy, guys, down here in the 160 to 155 would be a very good opportunity to pick up this company as a whole. As of right now, guys, we're just really looking to maintain this pattern of the weekly uptrend. We haven't quite lost our last level of weekly support just yet. So looking fairly decent on Amazon, all things considered, in terms of yesterday's drop or today's drop, right? So moving on to Google now. Google 1.96% to the upside, but Google in the after hours now at this point, guys. Well, I don't think you can see it on the chart right now. Let me just turn on my after hours trading for you, and we'll get you guys on. So extended trading hours, let's get that right away. Google, massive moves, guys. 15% at the top. Now the stock is only up about 11% in the after hours. Google had such amazing earnings, guys. I've been preaching this company for, the better part of the last 5-6 months at this point, telling you guys to buy it at every dip opportunity. So hopefully you have been, because now the company is really starting to collect those profits. Take a look at your beat on EPS. Fantastic beat on EPS, 25% beat on EPS, and a 2.29% beat on revenue. This company is expanding at such a juicy rate, guys. Take a look at these profit margins. Net profit margins are in the 25% range. The margins this quarter were actually even better. You can't see them on the chart right now, but take a look at this EPS growth through 2027. Massive EPS expansion, guys. The AI ramp is real. Massive revenue ramp as well. This company is so well positioned. I wish I had more shares. Even if I have been buying Google this entire time, I wish I had even more, right? That's a good problem to have. So let's take a look at Google's earnings, guys. And this is kind of the format that I'm going to be using moving forward. So when earnings happen on a given day, I'll give you guys, as I'm about to do right now, a 3, 4, 5 minute rundown maximum, and then I'll probably make separate videos on the largest earnings. I'm just still trying to find myself as a creator in the space. I'm trying to take inspiration from what other channels do, from what you guys are requesting, And, you know, although I personally enjoy doing the 10-15-minute earnings breakdowns in these videos, I think it's a bit long for a lot of people. And to be quite honest with you, a lot of people just want the meat from the bone, right? They just want the juicy stuff. And for me to go through a bunch of financial statements, I'm sure there's a bunch of you that do enjoy it. But for those of you that don't, I'll kind of cut these a little bit shorter, and I'll be making separate videos for your most important earnings. There, I'll be able to spend, 15-20 minutes per company, break down all the financial statements individually, break down the earnings slides, break down the guidance and everything like that, and do a bit more extensive valuation. But for now, we're just going to kind of keeping this to the largest points, right? The best points of the company earnings and a very quick valuation and my determination whether or not the company is cheap or expensive. Okay. So let's move into it right away. So Alphabet shares jumped 14% on earnings beat and the first ever dividend. Yes, first ever dividend, following in the steps of Meta, who did the same thing last quarter. Take a look at these numbers, guys. Revenue increased 15% from a year earlier, the fastest rate of growth since early 2022. The company also announced its first dividend and $70 billion in buybacks. Absolutely ridiculous, guys. Google's sitting on about $100+ billion worth of cash right now. They can afford the buybacks. So YouTube advertising revenue came in above the expectations, 8.09 versus 7.772. Google Cloud revenue, one of the company's most watched segments, that is now at 9.57 billion versus the 9.35 expected, beating on both of these metrics. Traffic acquisitions cost, slightly up, guys, 12.95 versus 12.74. So that a little bit of a negative point, but still largely offset by the increases in revenue. So the company said it intends to pay quarterly cash dividends in the future. Very good. The company also said its board authorized the repurchase of an additional 70 billion in shares in a manner deemed in the best interest of the company and its stockholders. Alphabet closed the quarter with cash equivalents, and securities of $108 billion. Massive. Look at the net income jump, guys. Net income jumped 57% to 23.6 billion, which is much better than a year earlier. Google reported total ad sales of 61 billion, up from 54 billion a year ago. That's more than 10% beat, right? 12% beat, arguably. Google's core advertising business is reaccelerating after a difficult 2022 and 2023, when rising interest rates and inflationary concerns forced brands to pull back their spending. Now advertising is in full swing again, and Meta said the same thing on their conference call last night. Operating income in Google's cloud business more than quadrupled to 900 million, showing that the company is finally generating substantial profits after pouring money into the business for years to keep up with AWS, Amazon Web Services, and Microsoft Azure. So if you didn't know, Google's cloud business, guys, was actually one of their weakest lines of business in the past 2-3 years. As the article just said, they were trying to catch up with their competition. Well, now all of that investment is finally paying off. You can see their operating income from the cloud business, so revenue minus expenses, is now quadrupled, and they're now significantly profitable, bringing in almost $1 billion on the quarter. All in all, guys, all lines of business of Google are pointing in the right direction. Costs are under control, and they're now doing heavy share buybacks. All of those a very good thing. So very happy with the company. Still one of my favorite investments. In terms of fundamentals, guys, here's your fundamental analysis, right? So EPS growth through 2027, 14% EPS growth per year. That gives them a 2024 PE at $177. Their after earnings price of about 26, which gives them a 2024 PEG ratio. So your PE divided by your growth rate of about 1.85. Anything between 1 and 2 is usually good. But for a company like Google, a more mature company, right? A company that commands sometimes a slightly higher valuation than its peers, it is not that bad, to be quite frank with you, even at the all-time highs of 177. Now, was this a much better buy at 150 all the way down to 140? Yes, and that's why I was kind of screaming on the channel to buy it back here. Now you know why, because we can finally see the lines of business, guys, are finally starting to hit that exponential expansion velocity after really being bogged down in 2022 and 2023. So 2024 should be arguably the best year for Google in the company's history. I could say the same thing about Meta, same thing about Amazon as well. So Google doing very good as well. Obviously now we're in price discovery mode, so daily uptrend is now back to the bulls. Weekly uptrend was never really lost. Now massive uptrend, right? We're in the mid 170s now at this point, and the monthly uptrend obviously expanding as well. So any consolidation, guys, if we pull back from our 177 all-time high where we are right now after earnings, any pullback just going to be for a higher low for further trend continuation, looking very good for the company. Now moving on to Meta. So Meta doing a great job of recovering today, intraday trading after people realized that, well, their earnings were really not bad as expected, right? So Meta up a healthy from the low of the day to the top. They were up about 6%, still ending the day about 10.5% to the downside. So Meta is currently in the context, guys, of this clear daily downtrend right now. So we remain poised and watch the size of the bounce. If the size of the bounce can get good enough high enough, to about 473. If we can get up to about 473, guys, it really sets the bulls up nicely to be able to recapture this daily uptrend and really start reversing a lot of this earnings negativity. In my opinion, guys, Meta is still extremely cheap down here. We're talking about a 1.37 forward peg. They're even cheaper than Google right at this point. And this company generates so much juicy free cash flow. They're also doing heavy share buybacks too. Nothing wrong with the company at all. So we'll keep an eye on whether or not Meta can reverse this trend. Of course, we are expecting the lower high. It all depends on the size of the bounce here, guys. If the size of the bounce tops out soon, let me just put the fibs on here one more time. If we top out at about 450 and then start reverting lower, well, you may just get a reaction like Netflix, right? Where we kind of come up, weak bounce, and then the bulls have to play defense lower. So that's kind of what I'm looking out for on Meta. But as of now, decent first day of bounce. Not enough data really as of right now to determine whether or not we're heading lower for the potential gap fill or whether Meta is going to be able to recapture this right away, guys. There's no, gap fills usually do tend to fill, but they don't always have to fill, right? If you're a gap fill maxi, if you believe that all gaps need to be filled in any given company in history, right? Well, what happened to this gap right here? What happened to this gap right here? They never got filled. Do you guys actually think that Meta, having its most profitable year ever right now, do you guys ever think that Meta is going to go fill these gaps just because there's gaps down there? No, it doesn't have to happen, right? So we'll keep a close eye on this as price action evolves. As of now, looking very good. Look at this buying volume, guys. Pretty much almost the same as last quarter as well. So people really get the most from discounts. I love Meta in these prices, guys. I will continue to play Meta in these areas if it does stay down here for the next coming weeks, guys. Such a juicy buying opportunity for Meta, guys. I don't know what you're doing. If you're not buying Meta, potentially today at a 17 to 21% discount from the all-time highs for a company that is just printing money, I really don't know what you're doing. No offense. Now moving on to Microsoft. Microsoft also not looking too bad, 2.45% to the downside. However, Microsoft was down at a certain point just under actually 5%, right? On the day, they recovered half of that very nicely. And now obviously in the after hours, after their earnings, guys, earnings complete smash. You can see from the bottom of the day of the open to the after hours earnings, a swing of 8%. Very healthy gain for Microsoft. In the after hours, guys, that's a gain as it currently stands of about 4%, which is standard for Microsoft, right? Usually about 4 or 5% up or down for their given earnings. So now obviously they're going to be recapturing right now this daily downtrend. We're going to be just looking to set the higher low into further daily trend change. Now that we're above here, you can see our after hours level is the 417 mark. So let's circle that right here. That's that circle right here. So now we're back above all our major resistances. The best case scenario for the bulls, right? Looking very good above our moving averages. We're now above our range of consolidation highs of 415. So it remains to be seen, can the bulls convert this into a new daily uptrend? Most likely they will be able to, guys. So any dip lower at this point, just gonna be looking for a daily higher low for further trend continuation. Looking very good on Microsoft. Let's get into their earnings right away. So earnings, not looking too bad at all, guys. They beat on everything. Wait till you see these earnings. Tremendous beat on EPS, 4.25%, and a nice beat on revenue by about 1.64%. Take a look at this company, guys. Their net profit margin, Microsoft always in the mid 30% range. This quarter was exactly the same, mid 30% net margins. Fantastic margins for such a large company, guys. Take a look at your EPS expansion the next couple of years. This is what I want to see. Consistent growth of EPS, consistent growth of revenue, guys. If you are looking at companies and they do not have this consistency, I really recommend you to find companies that do, right? Usually the price will follow the consistency of those earnings and revenue. Just a quick hint. Now, in terms of their numbers, guys, let's take a look at some of the data that came out of Microsoft today. So Microsoft cloud growth accelerates on back of AI push. Very solid quarter. Take a look at these headlines. Microsoft total revenue grew 17% year over year in the quarter. Net income was up from 18.3 billion all the way to 21.94 billion. Such a healthy increase, guys. Almost 20% increase in net income. That is your bottom line profits. fundamentally amazing. Currently, here's a quote, guys, from the chief finance officer. Currently, near-term AI demand is a bit higher than our available capacity. Microsoft has been increasing its capital expenditures to secure NVIDIA graphics processing units for training and running artificial intelligence models. So they will be spending more. And they said the same thing as Meta yesterday. They will be increasing capital expenditures towards their AI division. Now, revenue from Azure. This is their cloud segment, guys. This is the most watched number by Microsoft because it is their most profitable segment. Take a look here. Revenue from Azure and other cloud services grew 31%, compared with 30% in the previous quarter. Analysts were expecting 28.8. This is a huge beat, guys. Massive growth. Now, let's take a look at other lines of business for Microsoft in this table that was compiled by CNBC here. Very nice table. I'll move myself to the side. Azure, 31% growth. Dynamic products and cloud services, 19%. The suite of Office products, 15%, 13% as well, right? Their search business, news and advertising, 12% growth. Server products and cloud services, 24%. Windows commercial applications, 13%. Windows OEM, so Windows 10, Windows 11, etc., 11% growth. And their Xbox division, 62% growth quarter over quarter. Every single one of these lines of business growing in the right direction. Absolutely fantastic, guys. Nothing bad to say about the company. Yes, they're increasing capital expenditures a bit more towards AI, but that is going to help their productivity in the future. There is really nothing bad you can find in this report at all. So we'll just leave it at that. In terms of the valuation, guys, the valuation for the company, it's not all that bad. It's a little bit rich, but then it is Microsoft. You pay for the consistency of these earnings. That's why this stock commands a higher valuation, because it's extremely predictable and it's extremely consistent. Now, their metrics are fairly decent. Revenue growth through 2027, about 12.5%. That's good. EPS growth through 2027, about 12.7%. That is very good. Now, that gives them a 2024 forward PE at the after-hours earnings price, 417, of 35.7. 35.7 is very standard for Microsoft. It's not expensive. It's not cheap. That's usually what the company trades in terms of its historical value. But if we take this PE ratio as an expression of their growth, it gives them a PEG of 2.81, which, as I wrote here, is a little bit rich, right? Usually you'd like to see these PEG ratios between 1 and 2. Well, there's a number of big tech companies that are between 1 and 2. We just looked at a couple of them. Google is between 1 and 2. And Meta is as well. Those, in my opinion, have better value than Microsoft currently. But is Microsoft a bad buy right now? No, the stock will just continue moving up, right? Is there better risk to reward in the market? Yes, you can get some more outsized gains in the market. But once again, I reiterate, guys, you're paying these high premiums because the company is so consistent and so predictable. So it's always a trade-off, right? That's why it's more expensive. In my opinion, guys, Microsoft in these lower areas, 415 down to 400 is really not a bad buy for anybody who's considering adding the company for a long-term portfolio add, right? So very good as a whole for Microsoft, looking good. Technicals and fundamentals, both very sound. Now moving on to Netflix currently. So Netflix, not looking too bad at all, right? So Netflix, we're in the context of this daily downtrend currently after the earnings flush, and we're looking to reset the daily trend, right? How do you know that your daily lower lows or daily higher lows are set? Well, we need to recapture the hourly trend change, which is what the bulls did today. So if we can maintain this hourly trend change, guys, into tomorrow, we need to break the high of Tuesday. If we can break the high of Tuesday, well, daily uptrend is now set. And then we'll be looking to undo a lot of this weekly damage. Same rules apply. We're going to watch the size of the bounce and then trying to reset this into a weekly uptrend further down along the line, maybe in the month of May. Keep in mind, we do have overhead resistance right here. That's going to be a bit of an issue for the bulls to get through. That is pretty much $600, right? That $595, $600, all that resistance setting up. So first things first, let's get that daily trend change in motion. If ever the bulls fail and we set a daily downtrend, well, at that point it'll just be further healthy weekly consolidation, which will also be further healthy monthly consolidation for the stock. But I'm not really expecting too much more downside. The earnings were very good. If you remember, we went over them from last week, guys. Look at the PEG ratio at 580. We're now below that, right? Hey, you were looking for great companies, solid growth at cheap multiples. This is another one. Netflix, right? 1.37 PEG ratio at 580. Tremendous, tremendous value. So if Netflix continues, I haven't bought any shares after earnings yet. I was kind of waiting for the overall market to play out and the rest of big tech earnings. But if we maintain these relatively low levels, 550 and below, I wouldn't be opposed to adding some shares to the long-term portfolio. Not at all. Very, very good company. So still just looking for this daily trend change to really start in motion this recapture of even the weekly, right? So the bulls are trying. We're really trying to get this bottoming out process underway. Now, moving on to NVIDIA. Give me a quick second. So NVIDIA, guys, tremendous day of recovery today, 3.71% of the upside. NVIDIA was also in the context of this daily downtrend, just looking to recapture this into a daily uptrend. What did we need to see on the lower time frames? This is why inter-time frame analysis is so key, guys, right? So we had our first daily move up, and that was our initial daily bounce. The daily bounce, how high did the daily bounce get? Well, we saw that the daily bounce got as high as of yesterday, right? At about, let's call it about 50%, just over 50%, which was good, not the best, but it gives the bulls a chance at resetting the higher low into higher high. So after yesterday's flush, what happened was we lost the hourly trend change into an hourly downtrend. And I was saying, as soon as you recapture the hourly time frame, it means your daily higher low is set, and we're looking for the recapture of the daily uptrend. That will be the case if we break yesterday's high. If we break yesterday's high tomorrow, new daily uptrend for NVIDIA. We also need to get back above this 850 level of resistance, which the two moving averages are there, and our previous horizontal resistance line is there as well. So the trade is as follows, guys. The trade on NVIDIA pretty much was this morning. As soon as you saw the daily trend change with the after hours, when you see the breakout right here, you can take a trade. The stops go below your daily lows here, and if ever it flushes, well, you're wrong. But if you get this entry right down here, guys, you are riding it back up to prior support or prior resistance, right? So we would be targeting at this point roughly the 850 mark. The entry this morning was fairly good, provided some decent risk reward, right? 790-ish would have been the entry. The stop out would have been 760, so about $30 worth of risk to the downside. And the upside, guys, was all the way up at 850 from 790. So $60 of upside, $30 of downside. 2-to-1 reward to risk was a very decent trade for anybody looking to make that trade. Now, that being said, guys, just looking for this daily trend change. If ever, for which reason, guys, tomorrow we fail and roll over, well, then we'll be looking to obviously protect these lows down here to avoid the furtherance of the daily downtrend. Although we do have decent support down here, guys, 745 all the way down to roughly 706. A very, very juicy area for NVIDIA. So if ever we do come down into here, maybe over the next week, just going to be looking once again for our weekly higher lows for further trend continuation. And now NVIDIA stock's looking very good. No longer overbought on the weekly, and also the monthly time frame is cooling down as well. So this whole sell-off and consolidation period has been very good in cooling down your lower time frames. Now moving on to Tesla. Tesla continues marching to the upside. Another 5% today. Very good recovery, guys. And this was the best case scenario for Tesla bulls, I'll remind you. We were looking for the size of the bounce, and now the size of the bounce, well, it's a juicy one, guys. Take a look at the size of the bounce. We're getting close to about 85% worth of bounce. That sets up the bulls with the best possibility that once this daily move higher tops out, so once this hourly trend change shifts to the bears, then we'll be looking to set the daily higher low and get the daily trend change. So the bulls are looking very, very healthy. We've now created a ton of space between us and these lows at about 138, right? A ton of space, guys. Talking about almost 20% off the lows. So could be looking at a situation where Tesla is able to set the daily higher lows, maybe using this area of confluence right here, these lows right here, could set the daily trend change in motion, and then we'll be looking, can we recapture all of this weekly move? Well, funny enough, they're one and the same. This daily move down was the same as the weekly move down. Usually you don't see that too often. So if that's the case, how much of this weekly move have we finally recaptured? And you can see it should be roughly the same amount, guys. We'll have recaptured almost 75% of the move. So the weekly bulls are looking good to engulf and reset into a weekly uptrend, guys. Could we maybe be seeing the bottoming out process of Tesla? Yes, but as I reiterated, guys, it's going to be a very slow process, right? First, we need to get the daily uptrend. Then we need to confirm the weekly trend change. And then after that, we need to confirm the monthly trend change. So before all timeframes are back to the bulls, it's going to take a while, but it's nice to see that we played defense where it mattered the most and that Elon Musk was fully front and center on the earnings call, trying to be as optimistic as possible. It was actually one of the better earnings calls that I've heard from Elon in about 4 quarters at this point. You could really tell that he was doing a great job in promoting the things that the company is doing well rather than focusing on the negative aspects such as he has been doing in prior earnings calls. So very, very nice recovery by Tesla here. Very looking forward to see, can they mount this recovery story together, guys? And if we get that daily pullback for the daily higher lows, I may make an attempt, guys, at some longer form call options to really start riding this wave. If this is really the indeed true bottoming out cycle of Tesla, right? Could we kind of flutter around on the bottom here for a while? Yes, but I'm going to be using very long-term call options. I do believe the second half of this year will be a lot more kind to Tesla than the first half has been. So a little bit of a trade idea there as well. Now moving on to Palantir. So Palantir not looking too bad here, guys. Palantir up about 0.56%. They were down a lot more, but did a great job of recovering intraday, guys. Heck of an intraday recovery, up almost 5% from the lows. Palantir doing the same thing as the rest of our indexes, right? Daily downtrend, size of the bounce, size of the bounce as of yesterday, I was saying, fairly adequate, 61% and above of bounce. And now we've set the daily higher lows, right? Reversal. They had the hourly downtrend reversing into an hourly uptrend today, looking very, very healthy. Your daily higher low is set at this, that's the weekly. Daily higher low is set at the low of today. Now we'll be looking to break the high of yesterday. Break 22.22. We can get a new daily uptrend, and then we'll be looking, can we break higher than this resistance area? The moving averages are above us as well, and we do have a horizontal resistance 23.10. If we can really come hard into this area, guys, it's going to do wonders for this weekly chart as well, right? That is where the most recent leg of weekly selling is. If we can engulf that too, gives us a great opportunity to reset this into a weekly uptrend. Palantir with earnings the 6th of May, so still some time away. The bulls are playing great defense, guys. I keep saying $20, $19. Such a juicy area of support. So hopefully you guys have been playing this area aggressively, such as I have been too. Now moving on to PayPal. PayPal actually performing nicely on the day, even though they're down. Great recovery from the bottom, such as the rest of the markets, but they were red on the day. So PayPal trying to desperately reverse this daily downtrend. Now we've got an engulfing move to the upside, looking to set the daily higher low and run. That would be a break of yesterday's high. If we get the daily uptrend, that would be a bottoming out of the weekly consolidation of the past 3 weeks here, and we'll be looking for further weekly trend expansion. This is a gorgeous weekly uptrend. We're currently bottoming out here. We haven't broken below the 63 to 61 area, which in my opinion is the most important area of consolidation recently. That's why there's those 2 yellow lines there. So PayPal will really be beholden to its earnings next Tuesday as well. So one thing's for sure, I'm not expecting PayPal to break much above 67, 68 prior to earnings, just the same as I'm not expecting it to break below this level of support, 61. I really believe that earnings will send us in one of those 2 directions. The best thing that PayPal can do is maintain these gains into next week, maintain $64, $65, give us enough space that if ever earnings are underwhelming, at least we have 6, 7% worth of cushion before breaking some weekly structure. So PayPal looking very good, but once again, all of the attention will be on next Tuesday for their earnings. So that's pretty much everything that I had to show you guys for stocks today. Now let's take a brief look into my portfolio for the trades that I made. All right, guys, so taking a look at the continuation of the earnings strategy that I've been running pretty much all week, and today was a very good day as well. Now, we did have a couple of losses, and I'll explain why we took the losses, guys. It's all about reallocation of capital, and in tomorrow's video, I'll be doing a summary of all the premium that we generated this week, the wins, the losses, and how much we made at the end of the day, and how much percentage the portfolio either went up or down. So let's go through the trades that we closed today, shall we? So number 1 was Caterpillar. We took the Caterpillar trade before earnings for the 332.5s. We wrote those for about, let me just check yesterday's trading. We wrote those for roughly, give me a second here, guys. My bad. There's just too many options, right? So you can see right here, Caterpillar trade, 332.5, 65 cents for them. Now, Caterpillar did come down in the morning all the way down to roughly 330 and then recovered intraday nicely. And I was watching the recovery, guys, and around the 340 mark, the contracts were roughly trading for about 90 cents. I got into them for about 65 and they were trading at 90. So I was at a slight loss of about, let's just call it $25 right at that point, right? So I decided to take the loss on the contracts, even though they were above my 332.5, and I could have definitely waited for tomorrow. It's just not worth it, guys. Why? Because I would rather take this $33,000 in exposure, take a small loss, as you saw me close the position right here. Caterpillar bought back for 90 cents, $25 loss. What did I do with the money? What did I do with that $33,000 of exposure? I chose to go for Microsoft options, right? It serves me no purpose waiting for 90 cents, right? When I can go and get $3 for them, right? So that is the reason that I closed those Caterpillars a bit early, even though the trade was looking good and probably would have ended up, premium in my pocket by tomorrow. Just reworking the capital, putting the capital back to use. If it's not generating the best ROI, we take it out, even though it's a small loss, and we put it into something big. Now, secondly, the other trades that we closed today, CLS. So we had the 32.5 puts for the earnings. You guys can see CLS really doing very nicely, not coming anywhere close to your 32.5, which was all the way down here. So you were able to close those positions at almost, 90% profit as well. Even though they were monthlies, guys, we had these at 20 cents. We closed them for 5 cents. Now, end phase is not from today. I don't know why the portfolio is showing a bunch of positions from the other days. The ones that I closed today, though, were Ford. Ford, I had earnings yesterday. You remember I had about 8 contracts here and about 2 contracts right here. We closed all that premium. Those closed pretty much worthless as well. Ford, very, very easy earnings play, ending above $13. Our strikes were down here, 12 pretty much, all the way down here below support, and 11.50 for next Friday. So I would have been very surprised if those would have been hit. So we just ended up collecting all that juicy premium in our pocket. Another win. Now we did have IBM. IBM, guys, suffered the same fate as Caterpillar. So IBM, I had the 165 put, and you can see that although we dipped below, into the 166 region, we never came below 165. So in the afternoon, when I was gauging what to do with this position, we were back up to 168, 169. However, the problem is, since we were still close to 165, I wasn't in profit. So you can see here that I wrote the IBMs yesterday. We wrote the IBMs for about 28 cents in premium, so $28, and I had to close them for a little bit of a loss here. I actually closed them on the day for about 52 cents. So we took about a 25 cent or $25 loss on the position as well. What did I do with the $16,500? Well, instead of waiting for $52, what did I do with those? I chose to write Google, right? So I chose that, I used that exact same capital, got into Google for even more premium. So why would I hold 52 cents, guys, when I can get 79 or $1.36? Doesn't make sense. That's why I took the loss on that trade specifically and just reallocated the capital here. So hopefully that makes sense. Now, we did also have Mobileye. We had the 24 puts for May 17th. Mobileye obviously finishing the day fairly well here at about 30.9. So we closed that trade, 90% profit, nowhere close to our $24 assignment price, which should have literally been all-time lows down here. So very good. Close that premium at a profit as well. Then we had the MO, so Ultra Group. We had the MO. We had 2 contracts of the 41 puts. Those are fairly juicy as well. You can see the $41 strike was all the way down here, and Ultra ending nicely, guys, 43.44. So we closed those for pretty much 90% profit as well. Very, very juicy trade. Was that the last one, guys? Yeah, I think that was the last one for the day. Apologies. I don't know why they put all the contracts that closed yesterday, but you guys saw most of those yesterday. What were the new ones today? Well, the new ones were very simply, I wrote some Amazons for next Friday because I figured that if today was going to be good for Microsoft and Google, it would probably carry up Amazon. Amazon was already crushed on the day, down in the lower 170s. I wrote the 160s. Amazon has earnings next week. I wrote them for $2.17, well above 2%. And that is still a significant ways away from Amazon's current price, right? 173 down to about 160 would be about 7.5%. I'm really not expecting Amazon to go down there, but why did I target this area? That's the gap fill location, guys. That's just as simple as that. Amazon now up in the after hours, guys. Amazon was up healthily in the after hours, about 4%. So by tomorrow, a lot of the premium should be coming out of this contract already. So very happy with the way that trade went. I also took the Google 145s and 146s for next Friday. We got 79 cents and $1.36. Both of these contracts should be fairly worthless tomorrow. So another over $200. So most of this premium, guys, will be captured. That's going to be almost $400 in one day of trading. That's very good. The metas, I held my metas from yesterday because I believe that it was an overreaction. And you can see we are now profitable on these. I'm expecting Meta to close above 430 by tomorrow morning, especially because Microsoft and Google beat. So if everybody closes above 230, I just pocket this 210 bucks. If everybody closes below 230, well, I just get assigned shares and then I get to write some juicy covered calls on one of my favorite stocks at a location that I've been waiting for 2 months at this point. So I'm really not mad about that. And now we also wrote the Microsoft 370s. So, I mean, the expected move on Microsoft was about 4%. I went a little bit ambitious with Microsoft just because I knew that they were going to have a relatively solid quarter. And even if they didn't, I didn't think the sell-off would be anywhere more than 4%. So prior to today's after hours, 398, I measured the move down, and 370, you can see 370 was about 7.25% to the downside. So I would have been very surprised if I got assigned Microsoft at 370, and 370 was in this range of consolidation as well. In hindsight, I probably could have gotten even more aggressive, maybe the 375s, but I remained fairly conservative because of the fact that I was still in Meta, and these are two very heavy position guys, you know, $43,000, $37,000. They're not light by any metric, but all of these position guys should be ending worthless tomorrow. Another $315. So all in all, it was about $1,000 day today on the options premium. I also did something else today, guys, where we finally bought back one of our Amazon June 160 calls. These are leap call options. We bought them before the close. Literally what I bought these for a month ago when I made this trade first. Took profit a couple weeks back. Now I'm back into it with profit in my pocket for the same exact price. And then obviously Amazon up 4% in the after hours. So these calls should be printing money by tomorrow. Going to be looking to hold these now for the long term. I also closed a portion of my Tesla position. Tesla, I had those call credit spreads. I saw the writing on the wall midpoint in the day, guys. Had to close the call credit spreads. You can see those right here. Bought and sold back for... Well, you can't really see the difference here, but, you know, I basically got a credit of 20 cents. I bought them back for roughly 42 cents. So I took a loss of about, 2 times 20 cents. So in layman's terms, guys, about $45 worth of loss on that trade. So not that big of a deal. I also maintain the Tesla put position that I'm going to leave on, guys. It only costs about $155. I'll leave it on in any case event that Tesla does decide to potentially set a daily higher low trade. That's what I'm looking for. I'm just looking for them to set a daily higher low, and maybe I can get some premium back on that put. But that put is for next Friday at the 150. I'm pretty sure I'm going to lose money on it, but we're just going to let it ride just in the event, guys, right? I'm not expecting a flush on Tesla. The reason I took that trade just for the daily higher low for trend continuation. I want to get as much juice as possible on this daily higher low. That's why I bought this put option. I usually never do weekly put options because it's such a gamble, right? So that one just may be another case of just taking a small loss on that. Other than that, no more changes in the portfolio. So hopefully that was educational for you guys. Apologies if I ran through it a bit quickly. I'm trying to keep these videos as short as possible, right? So hopefully that whole process was educational for you guys. Having a very good week doing this, the new earnings strategy with increased volatility that I've been running. Very, very happy with it so far. Looking forward to running it next week as well. So far this week, probably well over $1,000 in premium at this point. So I'll be doing all of the math tomorrow for you guys and showing you what were the wins, what were the losses, and explaining each one of the decisions more in detail. So hopefully that was helpful for you guys. Hopefully you enjoyed today's video. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new, guys. Would love to have you here. And as usual, if you have any questions whatsoever, stocks, technical analysis, options trades, anything you want, leave them down below in the comments and I'll be sure to answer you within the first 24 hours. Take care, guys. See you tomorrow after the close, and peace.